Robotics, AI, electric vehicles, these megatrends all share a common enabler: rare earth materials. During China's export threats back in October, rare earth stocks were all the hype. But I believe its criticality in all these megatrends make it a viable long-term play on its own merit. The most popular name in this space is MP Materials, since Apple and the US government have both made investment commitments for MB Materials' success. However, the company I'm most interested in for this space is their former sister company, Neo Performance Materials. Its origin started in 2015 when Molycorp filed for bankruptcy. At that time, the upstream Mountain Pass mine was credited to JHL Capital to eventually form MP Materials, and the higher margin downstream processing plants were credited to Oak Tree Capital to form what is now Neo Performance Materials. Today, Neo Performance has two primary business segments: permanent magnets and critical materials, such as chemicals, oxides, and rare earth materials. And the application of these components are what enable the most impactful macro trends to proceed. For electric vehicles, 85% of these motors use rare earth magnets. For robotics, these magnets are required in the micro motors. And for the AI data centers, these magnets are required in the large fan motors. Planes and defense tech require critical materials to be used as superalloys in jet engines. The key theme here is that rare earths are critical in all the most advanced technologies in the world. The problem, though, is greater than 90% of rare earth permanent magnets come from China, which makes this an ultimate supply chain risk. Also, since these rare earths are in the fastest growing demand levers and macro trends, global forecast demand is expected to grow by greater than 230% in the next 10 years. Neo Performance Materials addresses this problem by being one of the few integrated rare earth separators outside of China. This is an attractive point for North American and European markets. Neo also has a parallel supply chain to process rare earths only within China. Neo doesn't pick a side, but instead offers a solution for the China and the Western world markets individually. From a financials perspective, Neo has had solid profitable growth despite being in a volatile materials industry. Revenue is expected to continue being volatile as the price will change dependent on the market price set for rare earth materials, which 2021 2022 had higher prices as global economies opened up again from COVID. So materials will always have some level of price volatility, but if profits remain the same, that tells me that Neo Performance has pricing power. After declining from the 2021-2022 highs to a pretty bad 6% adjusted EBITDA margin in 2023, Neo has put focus on their highest margin MagnaQuench segment to get margins back at 14% now versus 12% margins in 2022, despite 2022 having significantly higher revenue. This is the benefit of investing in a downstream processor like Neo instead of an upstream miner, is the ability for Neo to shift to higher margin value added segments versus being tied to commodity pricing when mining. What excites me most about Neo is they are investing in growth rather than just happily expanding margins to pay their dividend. In September of this year, they officially opened a mass production scale rare earth permanent magnet plant in Estonia, only the second operating in all of Europe. The EU President, Ursula von der Leyen, said it best: "This is a rare earth permanent magnet manufactured in Estonia by a Canadian company using raw materials from Australia for German and French automotives." This just highlights the value case for NEO to provide these critical materials with a non Asian supply chain. Currently, the plant can do 2,000 metric tons annually, which can support roughly 1 million electric vehicles if it's all dedicated just EVs. Eventually, this plant wants to expand to 10x this volume, which would be nice, but that would only cover 8% of the estimated demand outside of China. Lots of room for Neo Performance Materials to grow. Let's come up with a potential 2030 bull case valuation for NEO should they hit this 5K metric ton expansion. On the business lifecycle chart, I would put them here at the tail end of a growth company. They will be expanding revenue at double digits due to their new Estonia plant with continuous expansion of capacity. Thus, the best metric for me to evaluate them is price to adjusted EBITDA. Okay, so looking at 2030, let's start with revenue. Today, they're doing about $500 million in revenue in their legacy business. I believe their legacy business, which is mostly chemicals and oxides, grows at a terminal rate of 3 to 5%, giving this business a $600 million revenue run rate in 2030. The Estonia magnet plant currently is capacitized to 2,000 metric tons, but by 2030, I believe they can be at phase 2, which would mean 5,000 metric tons of capacity. No plant runs at 100% capacity, so let's assume 80% utilization at $100,000 per ton of sintered magnets, given this new plant a $400 million revenue rate for 2030. So overall, total revenue in 2030 would be roughly $1 billion, almost double the rate today. For adjusted EBITDA, after divesting of lower margin businesses since 2023 and optimizing this year, it is currently at 14%. I believe operating leverage will be gained from the scaling of Estonia's plant, so this can be at an 18% adjusted EBITDA margin. For price multiple, I believe the price to EBITDA should trade at 14, slightly higher than the industry average at 10, since NEO would command a premium as a strategic asset for Europe as the only specialty magnet manufacturer of rare earth magnets for Europe's EV or renewable energy markets. Putting all this together gives NEO Performance a $2.5 billion market cap in 2030 for a bull case, over 5x returns from today's price. Very solid upside, but this is dependent on NEO executing its phase 2 expansion in Estonia, which also is dependent on Europe's automotive giants coming into long-term contracts with them. With that said, let's review the technicals and run this stock through mine and John's framework to determine if we will want to add to our community portfolio. Before we do, please read the disclaimer in the notes below. We are not financial advisors and anything we say should not be considered financial advice. Also, if you like content like this, please help us out and click a like and subscribe as we analyze the most innovative companies twice per week. Now let's run NEO Performance material through my 5-point framework. From a leadership perspective, I give this a strong. Their CEO, Rahim Sulman, took over as CEO in 2023 and beforehand was their CFO. He rates so highly for me as he seems to be a disciplined leader focused on results with a financially conservative mindset and focuses on profitability and cash flow rather than being caught in the rare earth hype to recklessly expand capacity. In the volatile rare earth sector, this measured leadership approach helps me build trust in their ability to sustain profitability, unlike their former parent company, Molycorp, which had to declare bankruptcy due to a high debt load. From a valuation perspective, I give this a very strong. Our 2030 bull case supports 5x potential to a $2.5 billion market cap versus today's $500 million market cap. I was actually surprised this was only a $500 million market cap, since MP Materials' market cap is 20 times larger at greater than $10 billion. For revenue and profit growth, I give this a strong, as the growth in their Estonia permanent magnet plant will support double-digit annual revenue growth for the next 5 years. And best part of all is they've shown the ability to maintain profitability in the boom phase in 2021 and 2022, but also during the decline in 2023 when rare earth prices declined. For a large total addressable market, I give this a very strong. Individually, their 2,000 metric ton capacity for Estonia today is only 1% of all non-China demand, so lots of room for them to expand just to cover today's opportunities. However, I expect this demand will continue to increase as defense tech, AI, robotics, EVs continue to grow. Lastly, for secular tailwinds, I give this a very strong. Although the China export threats did not actualize, it did show the major supply chain vulnerabilities for all the current trends that European and US governments will be incentivized, along with leading corporations, to quickly set up a non-China supply chain for rare earths. Bosch, who is a major vehicle component supplier, has already signed a capacity agreement with NIO that is a win-win for both. Bosch gets supply commitments early on to ensure that NIO will always be able to supply them, and NIO gets stable revenue stream no matter the volatility in the economic cycle. Overall, NIO rated very highly in my framework, and I would normally be at buy, especially since this is a profitable small cap with 5x potential. However, I am a no due to the geopolitical risks. NIO's plant in Estonia is right on the border with Russia, and Estonia and Russia have had recent enough history of hostilities amongst each other. Even though Estonia is part of NATO, the narrative of possible cyber attacks, power disruptions, or logistics blockades could cripple operations overnight and really impact their stock. A key aspect I look for in my stocks I pick is resiliency against a singular event, which unfortunately, the Estonia plant does not pass this for me. What do you think, Dad, when you review NEO Performance Materials?
Thank you, Scott, for that excellent presentation. Okay, today I'm going to do my framework for NEO Performance, symbol NOPMF. Okay, for the company fundamentals, the dividend is 2.4%. I couldn't find a beta on it. Market cap is 500 million, and earnings comes out on March 17th. So for that, it's a neutral because the dividend is 2.4%, and like I said, a beta is not applicable. So, I mean, I couldn't find it not available. So I gave it a neutral. Okay, for earnings history, 4 of the last 4 quarters it beat. So that's a positive. For company fundamentals, it didn't have a profit margin, so I have to look at the free cash flow per share, and that's 25 cents of free cash flow per share. The debt to equity is 22%, and the PEG ratio is, I couldn't find a PEG ratio. There's no PEG ratio, so it's not available. So anyway, that's a neutral, and that's being a little generous, but that's a neutral. Okay, for the technicals, 200-day moving average is sloping positive. The 50-day moving average is above the 200, and the price is above the 200 but less than the 50. And for the Bollinger Bands are real tight, real close together. So that's very tight volatility. So that could precede a breakout, either positive or negative. Nobody knows, but sometimes tight volatility, when the bands are close together, it can precede a breakout. Slow stochastic oscillator is 47, which is neutral. MACD is neutral, as is the unbalanced volume. So for technicals, I'm a neutral. And then for the analyst coverage, it has 4 holds and 1 buy. And the analyst that I could find given a price was 18. And that's the analyst's opinion, not mine. So that's, and there's no institutional holdings. I couldn't find a statistic for it. So that's a neutral. So overall, Scott, I'm puzzled on this one. The Bollinger Bands are very tight, which may precede a breakout, as I've said. And there's so much need for rare earth materials and magnets. So the only thing is, it is a Canadian company, so I don't know if the U.S. is going to would tariff it, which I doubt. But or maybe Canada can do something, hold it off from the U.S. It's a hard one to. This one's a tough one, but it's definitely a good thematic because we need magnets and rare earth metals. So right now I'm a maybe on it, maybe a quarter position for a short-term gain only, due to the fact that the Bollinger Bands, as I said, are so tight together that it may precede a breakout. But back to you, Scott.
Thanks, Dad, and good reco to cover this stock today. For us to add to our community portfolio, we both need to say yes, which I am currently a no due to the Russia geopolitical risks. Short term, though, you are going to consider it due to the favorable technical setup of the Bollinger Band. With that said, thank you for watching. Please click a like and subscribe to follow us as we analyze the most innovative companies twice per week. Until next time, happy investing.